Samsung Electronics has just released its Q2 2025 earnings, and the numbers tell a compelling story. Revenue came in at KRW 74 trillion, reflecting a 6% decline quarter over quarter, while operating profit plummeted to KRW 4.6 trillion, down a staggering 31%. This performance missed market expectations by 22%. While revenue held steady year over year, the sharp decline in profitability is concerning. The highlight here is the operating profit shock, which clearly indicates that the company is facing significant challenges. Let's break it down by business unit, starting with Device Solutions, or DS, which has become the biggest drag on Samsung's overall performance. Operating profit for this segment was just KRW 0.4 trillion. Within this unit, memory chips generated KRW 3.0 trillion, with DRAM showing some positive signs, but NAND is still in the red. The Foundry and LSI segment reported a loss of KRW 2.6 trillion, primarily due to delayed HBM recertifications, inventory write-downs from China sanctions, and rising costs associated with HBM redesigns. The takeaway here is clear. There's a structural weakness in the foundry business, and a short-term recovery seems unlikely. On a brighter note, the Mobile and Networks division, or MX&W, performed stronger than expected, with an operating profit of KRW 3.0 trillion. Shipments totaled 57.4 million units, down 6% quarter over quarter, and the average selling price dropped to USD 274, a 16% decline. The reason for this resilience? Samsung has expanded AI features even into mid-range models, and strong sales of the Galaxy S25 series have bolstered performance. This shift indicates a reduced dependence on premium models, with the mid-range strategy really paying off. Moving on to the display panel segment, operating profit was KRW 0.5 trillion. Despite facing intense competition, the display business is expected to benefit from seasonal strength in the second half of the year. Harman, too, showed solid growth, with an operating profit of KRW 0.4 trillion, up 47% year over year, driven by strong demand in automotive electronics and audio segments. Looking ahead, analysts have mixed projections. For HBM, certification delays are likely to lower shipment targets for 2025, but with strong AI demand and tight supply, Samsung's entry into this market looks promising. The DRAM sector remains tight, with pricing expected to rise, while NAND continues to operate at a loss, necessitating industry-wide restructuring. The non-memory foundry business still faces weak profitability, but a gradual recovery could be possible in the mid to long term. The display segment is poised for a seasonal upturn, with increased orders from key customers anticipated. Now, let's talk about the impact on Samsung's stock price. In the short term, while earnings bottom has been confirmed, recovery momentum remains weak, leading to cautious investor sentiment. However, in the mid to long term, the key will be full-scale HBM shipments, while the mobile business provides some earnings stability. In summary, Samsung's Q2 results reveal weaknesses in semiconductors, but highlight solid performances from mobile and display segments. For the stock to rebound, we need to see meaningful HBM shipments and a turnaround in foundry performance. Currently, Samsung appears to be in a trough phase, with limited downside risk and potential for gradual recovery. For long-term investors, this might be the time to pay attention.